Have the management joining us on the show today, Mr. Jitendra V. Adya, the President Finance at Atul Auto, to talk to us about what actually led to that rally. Hi, Jitendra. Good to be speaking with you. Well, I yesterday saw some announcements that you have done some sort of tie-up with, Geo Things as well, and that's to revolutionize the three-wheeler industry. Talk to me about whether this is a very big announcement. What is the potential? What kind of tie-up is this in the first place?
See, first of all, we are getting into EV and we are almost ready with our product range that provides a solution for fixed battery as well as swappable battery. The time is to get into the more technological things. I restrict myself for giving you more details because I'm yet to receive a complete MOU. I believe in our next interaction, I will be able to reveal much about this tie-up.
Okay.
Right. Mr. Jitendra, if you could, also just talk about what would be in terms of more details of the benefit that synergies that Atul Auto will start seeing, and by when will those benefits come in terms of this deal that you have signed, or the agreement that you have with GeoThings?
See, if we look at EV has more to do with, telematics and Geo obviously has got a wider technological platform. While this vehicle needs more, monitoring in terms of safety as well as in terms of its performance, but it is going to create a great synergy for us and it will give a wider platform, not limited up to domestic market, but when we will go internationally, that will help us to grow further over there as well.
About that international opportunity, could you talk to me about what kind of growth potential you see in exports, with which regions, and overall as the pie of your revenue, how much will come from exports, let's say 12 to 18 months out?
See, currently we are growing revenue of around 10% from our exports, and we believe that in a midterm, not exactly in 12 to 18 months, but somewhere between 2 to 3 years, we expect to double the revenue from our exports.
Okay, doubling your revenue from your export side, but overall also just want to understand in terms of the growth that one could be expecting overall for the business in terms of your sales and revenue. Last year was around a 3% growth. FY24 is what I'm looking at. What is the pace now of growth that you're expecting to see a CAGR growth over the next 2 years?
Let me remind you, last year first, almost 4 months were washed out on account of certain compliances with our diesel vehicle, and we could not deliver the expected volume. This year, we started with a complete clean ground, and in the first 2 months, we were able to just, put the numbers rightly, and we expect that month over month, that will be keep on increasing. At management, we are first targeting to achieve the pre-COVID level, which was around 3,500 to 4,000 vehicles per month. We are quite confident that with a complete product range available with us, we will be able to just achieve it very soon.
But sir, the street is banking a lot on your business. I understand that your revenue profile right now is around 500 odd crores. You are expecting a revenue growth of around 20% this year. When do you see yourself hitting that, let's say, 1,000 crore mark on the top line and perhaps double digit on the margin? Because right now they stay between that 7-8% mark.
1,000 crore, yes, that's going to be definitely the first mark. As I was telling you, if you count, if we are able to achieve that pre-COVID level, obviously we are going very close to 1,000 crore, top line. And in terms of margin, yes, EBITDA is likely to improve with, the volume. We are definitely going to get some benefit out of scale as well, apart from raw material negotiation. And in terms of net margin, let us see and wait because we are into a seeding phase of the vehicle. There will be certain expenditures which would be one-off and likely to deliver good margins in time to come.
Okay, fair enough. So there might be some one-off costs that we should be ready for. But you were talking about EVs and the kind of potential it has. If I have it right, it contributes almost 25% of the sales right now. In the medium term, what's the expectation that it can inch up to? And any more such tie-ups in the pipeline, the way you had just with GeoThings right now?
See, as of now, we have required tie-ups in place. One is to have, the right kind of vendors, for which we have tie-up with all renowned vendors. For technology, yes, one of the big thing is Geo. Other is for swappable battery, tie-up in place with Honda. So as of now, we would like to bank upon it. Whatever required infra is there, that is already in place. And first, we would like to encash that, and then we will have further types.
Fair enough. Sir, is there something else that the street should also watch out for in terms of, let's say, a new product development in the pipeline, or something on the supply chain side of it? I'm just trying to make sure that we have covered all ground here in terms of our conversation.
Can you repeat the question? There was a break of voice in between. I'm
Get a
sorry.
sense from you, is there something else in the pipeline that we should watch out for as well in terms of any new product development, any supply chain streamlining that you're doing in terms of backward integration, etc.?
No, as of now, we are sufficiently covered, and I don't expect in a very near future. But as and when it will be there, we will come with a pre-announcement, and we will definitely appraise you and the stakeholders well in advance.
Taken. Thanks so much, sir, for making time and speaking with us. Really appreciate you joining us in the show.
If you like this video, then like, share and subscribe to ET Now.